Hello everyone and welcome to your Glassnode video report for week 10, 2023. So we have seen a bit of a pullback of late, and what we're going to look at today is some of those key levels, and there's about 3 of these on-chain cost bases that are relevant that we're going to explore today. And what you'll often find, or certainly I found in my experience, quite often when you look at these realized price levels, they often tend to coincide with technical analysis levels. And the reason is really it's the same thing. They are coming from investor behavior. Price action is a result of human beings making collective decisions on buying and selling, as are transactions moving around on chain. So what we tend to see is that these things often coalesce around similar levels. There's the 200-week moving average, which a lot of people have been looking at. We've been testing the underside of that, and that just so happens to coincide with 3 fairly significant cost basis levels. So we're going to explore that in a bit of detail, and just kind of get a bit of a gauge on how you consider these realized prices in particular. So not only are we going to be looking at these realized price levels, we're also going to be looking at 3 concepts, really. The first one is there's some popular metrics, net unrealized profit and loss, or NUPL, and MVRV. These are 2 very, very popular oscillators. They're both actually derived from each other. But the challenge with these is that they're measuring the amount of unrealized profit and loss in the system. But there's coins that are lost, Satoshi's coins, early miners, coins that just have never been spent from back in 2011. Do we really care that they're in profit? We know that they're in profit, and really until they're spent, we kind of assume that they're lost. So I want to take you through a bit of an exercise that we're going to do to actually eliminate and remove those coins to get a more accurate view on the reality of where the cost basis of the market is. We're also going to look at some momentum and some of these different metrics, these volume momentum type tools in the on-chain activity space to look at kind of the adoption and the growth. And we're also going to look at profits being taken as we impulse higher, and we actually see that momentum kick in the space. And that's the thing, when you start to see these transitional periods, if we are starting to come out the back end of a bear, something that you want to see is profit taking and the market's ability to absorb that. That's a regime shift. And over the last couple of weeks, we've kind of been in this, are we not in a transitional period? So a couple of metrics to try and track that. Now, if you did miss it, yesterday we released a brand new dashboard which is designed to help people find overheated and underheated conditions, really trying to use some very popular oscillators, MVRV ratio, pure multiples, SOPR, and reserve risk to try and find confluence around market tops and bottoms. You'll find a link to the description, to the video and to the dashboard in the description below. And please, as always, do give us a rate, a share, and a subscribe. It does help this channel. Right, let's get stuck into it and get into the analysis. Okay, so we are going to start with the concept of cost bases. Now, the idea here is what we're looking for is the average price at which every coin moved, often called the realized price. Now, that's all well and good. But we can also, because we have the power of on-chain analytics and we can inspect different cohorts, and this is really where on-chain analysis starts to diverge from traditional finance, aside from being a whole lot more fun. We can actually break down the market into whatever cohorts we happen to want to look at. Now, in this instance, we've got this blue curve here. This is our older supply, coins older than 6 months. So if you can cast your mind back 6 months ago, we had the 3 arrows and the lunar collapse. We were in this consolidation range. As we documented through those weeks, there was a huge amount of accumulation and capitulation that went on. And then we had FTX, which just kind of amplified that whole thing, and we saw more of the same. So 6 months plus ago, we're in the bottom of this consolidation range. We've kind of just entered it. We're about halfway through, actually. But the other side of it is there's a lot of people from the previous cycle. So this blue curve is picking up a huge amount of supply that's held in the previous cycle, people who are still today underwater on their coins. So as you can see, we found resistance once, we poked our head above twice, and we found resistance on the other side and have since broken below. So again, this often aligns with technical analysis indicators. We also have the 200-week that is sitting at this similar level. But you can see that basically we're getting up against resistance of people who are essentially, on average, underwater because they were top buyers from the previous cycle. There's going to be plenty of hodlers who are just not going to care, but there's going to be some that as price comes back and they've kind of sat on their coins underwater for a year and a half, 2 years, and then finally price comes back to their break-even level, some of those folks are going to create resistance by actually wanting to exit. So it really shouldn't be too much of a surprise that we find some kind of resistance here. But of course, that is not the only level that is sitting at this place. This here, we're looking at whales and exchanges. So whales being entities with more than 1,000 BTC in their wallet. This is using our clustering algorithm. So it's trying to actually look at which whales, we're not just looking at a single address with 1,000 plus. We're trying to look at all their different behavior patterns for those different entities. Now, for these ones here, I've got three curves. The yellow one here starts at the start of Binance because really the chart that you can see on the screen, this zone of price action really is kind of the mature market. If you go back before this and even, before Binance, that's kind of a nice threshold somewhere in the middle of 2017 where the market is now large enough, liquid enough, big enough for whales to actually participate in any kind of meaningful scale. If you go back to 2015, it was actually much easier to become a whale. If you go back to 2011, it was much easier to become a whale because coins were cheap, coins were easy to mine. The market dynamics were just very different, and it didn't really even have solid exchange infrastructure for trading. So the three curves I've got here, the first one is kind of starting at, let's call it our modern history, when Binance started. Again, these dates are a bit arbitrary. We're just picking something that's meaningful. We've started our second one here, the purple one, which is the most important one, at the bottom, the absolute bottom tick of the 2018 bear market. And we started another one in 2020, at the bottom of March 2020. And the reason we've chosen these, this is literally, if you look at the average acquisition price for whales, it cannot be more opportune than this. This is literally looking at whales who started accumulating at the very, very bottom of the previous bear cycles. And what you can see is that we actually came up and retested pretty much the exact same level as our older supply. We have been testing the realized price of the 2018 bottom whale cohort. You can see they've been in the money through all of 2019. They had a brief scare here in March 2020, but price has been essentially above their realized price until the deleveraging event back here in June. And it has essentially found that first point of resistance. And here we are finding the second point of resistance. So again, a single realized price, well, who kind of cares? But when you have multiple realized prices telling you the same story and the 200 week, you start saying, okay, there's not only, 200 week is something everybody is looking at. It's fairly widely observed. You've also got a psychological element to this. There's entities in this market who are actually kind of sensitive about this particular level. Now, probably the more interesting and exciting one, this is going to blend what we're talking about with MVRV and NUPL. So we mentioned before, I don't particularly care that Satoshi's in a lot of profit. We know that that's true. But does it really matter that he's in tens of thousands or millions of % profit? Yeah, probably not. It doesn't really matter. Until he really spends those coins, they're kind of dead. So what we're doing here, there's two metrics we're going to look at here, adjusted MVRV and adjusted NUPL. And you will find both of these inside Workbench under our profit and loss category. You'll find adjusted MVRV and adjusted NUPL. I've been spending a bit of time, and me and my team have been looking into this and trying to understand how do we discount the tremendous profits that are held by Satoshi & Co. Now, why does this matter? Well, if you think about it, let's imagine that Satoshi's coins are truly lost. The losses that we've seen from the 2022 cycle are essentially being offset by the tremendous profits held by those lost coins. So in a way, when we're looking at standard NUPL or standard MVRV, we actually are looking at a kind of quieter picture. The damage is actually much, much worse because all those losses by investors that bought up in the top of this market are being offset by the profits held by Satoshi. So if we remove the profits held by Satoshi, what is the true representation of where the average cost base is? The real realized price, well, an interpretation of the realized price, where is that if we discount all those very, 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 very profitable coins? Well, the blue curve is our standard MVRV and the orange is our adjusted MVRV. And the adjustment here is simply subtracting any coin that's older than 7 years. We don't care about the profit held by coins older than 7 years. The nice thing about this metric is, let's say a 7-year-old coin gets spent, this metric will automatically adjust because it will realize a profit, it will come back into circulation, and this metric will automatically recorrect itself based on that event. So with that said, you can actually see here that the orange curve in 2017 starts to diverge. MVRV is trading lower than the standard MVRV. We'll talk about this in a second. The concept here is because there's less profit in the, let's call it the active supply, the supply that's really moving and inside the system. There's less profit in there. which means that the average price, the average acquisition price is actually higher. And it makes sense because people are buying at 50, 60,000. We don't care about the prices at $0. We care about 50, 60,000. You can see that we are actually testing the underside of the adjusted realized price, 24,700. Now, that particular level, we often talk about the realized price as the average acquisition price of the market, and that's true, but only if we consider Satoshi and all those lost coins as active participants. If we choose to exclude those as active participants, then a more accurate representation, assuming that 7-year-old coins, that's a simple heuristic, that's the assumption, but if we assume that 7-year-old coins are lost, that's our assumption, then we are actually retesting the real realized price. The actual cost basis of the market is higher. And that means that the MVRV, which is the profit multiple, the unrealized profit multiple, is actually lower. So with this particular model, we can start to assess of all the active supply, where is the realized price? And we can see that we're currently testing the underside of it. Now, on a very similar frame of reference, NUPL, which is another metric, you may have noticed in the standard NUPL that the bottoms tend to be on this ascent. They tend to be climbing each cycle. They're drifting higher. That is the result of these lost coins holding larger and larger and larger profits, despite the fact that they're really not economically meaningful. So if we subtract those out, our orange curve here is showing us the true damage of the 2022 market. And you can see that we've actually dipped down to the same level as we were in 2018. If we compare these, apparently the 2022 cycle was not as bad as 2018, but that's actually not true. It was as bad, if not worse, and equivalent to what it was back here in 2015. So by actually removing this long-term supply that just hasn't moved in 7 years, and see these zones where it goes down, this thing here is this metric actually self-correcting. When those coins are in fact found, oh, they're not actually lost, someone spent them. This metric will automatically correct itself. So it's just one of these approaches we're using to try and better understand the true nature of these markets, where the real cost basis is, and where the real unrealized profit and loss really sits. So moving on to our second topic, looking at on-chain activity, you'll notice that we've been using these momentum charts, which is basically plotting the monthly moving average in red versus the yearly in blue. It's a really nice way. It works quite well for many on-chain activity metrics, because what we're trying to track is the near term, the monthly, the recent activity, picking up relative to the long-term baseline. And if it's above, it is. If it's below, it isn't. But I want to introduce another concept here about, I'm just going to call it payload. So we're looking here at new address momentum, so the number of new addresses. This does not account for if the address holds a whale amount of BTC or it's creating an inscription and an ordinal with 10,000 sats. So it doesn't account for coin volume. This is purely an activity-based metric, more akin to the user base, less akin to the wealth distribution. So with that as context, we can see that we have a very, very nice push higher. In terms of the overall monthly activity, we now have a strong leg higher. It actually resembles 2019. It's got these kind of waves that are pushing higher, and the yearly is also starting to curl around. So in terms of the user base and the activity side, we've got some positive momentum. This is good to see. But does that actually carry any transfer volume? Do we have a payload that's actually associated with those addresses, or is a large majority of that actually associated with ordinals and inscriptions? Now, there's no question that seeing more people coming into Bitcoin, even if they're transferring 10,000 sats, and even if they're transferring ordinals for JPEGs, that's still adoption. So it's still an important and meaningful perspective here. When we're looking at transfer volume, however, this is a bit more onto the economical frame of reference. Are we actually seeing value flowing through the chain? Now, by this metric, there's a few things to note here. We're looking at the transfer volume, so the amount of BTC that's on the move. Note this enormous and precipitous decline. Now, it is worth noting that this bubble that you see here, pretty much from the all-time high to right before FTX blew up, this large bubble is heavily to do with FTX and Alameda misbehaving, really moving around people's funds, misbehaving and misappropriating funds. So there was a huge amount of transfer volume that was associated with that entity, unfortunately. So this thing here is basically coming off an artificial peak. right? So we are in the process of recovering from that, but you can see that this is actually quite low down. So if we were just to look at this particular metric, we're basically looking at all the activity on the chain, but it's going to be a little bit clouded by some of that misbehavior that was going on, unfortunately, in the really in the last 12 months. But we do have a solution to this. This here, we're looking at the exchange volume momentum. Now, the nice thing about exchange volume momentum, and you can see here that we are missing that bubble. Basically, once the all-time high got put in, we moved into a nice and consistent structural downtrend. This is much cleaner. The reason why this metric is very, very good to look at, and again, you'll find this in our exchanges and the other ones in our economic indicators, you'll find these momentums. This is benefiting from all of our clustering for wallets. So we are looking at the exchanges and we have a very, very good view of coins flowing in and out of Binance, in and out of Coinbase. So this here is really going to filter for the coins that are going in and out of exchanges and are really generating that price action. If you've got a bunch of washing going on chain, coins moving between Alameda and various other entities, that's kind of not really economically meaningful. We also see this cleanliness in our entity adjusted variance. It's just kind of those more raw transfer volumes where you'll lose that signal. But we can correct for that by looking specifically at our exchange volume because it's much, much cleaner data. And what you can see, we similarly have a bit of an uptick, but we are still down below our yearly baseline. So the real takeaway here, we do have more on-chain activity from a user base perspective, but we don't yet have it coming in from a transfer volume, a payload, a value moved perspective. So it's just something to be aware of. We don't necessarily have volume moving. And to be fair, that's not the worst thing because volume moving also means that people who acquired at cheaper prices, like over the last couple of months, are essentially exiting their position at scale. So it's kind of a bit of a both. We're in this transitional period where we're still very much in a hodler type territory, even though there is a little bit of momentum picking up. So either way, some things to pay attention to. Now, the last topic I want to touch on is that profit taking concept. And what we've got here is two metrics that I use all the time. Variance of SOPR, spent output profit ratio. This is a profit multiple. Look at all the coins that were spent on each day. What is the average profit above one or loss below one that was locked in by the market? So as you can see, after an extended period, really since May 2022, we traded well and truly below a value of one. This is the market on average locking in losses for many, many months. This is pain. And you can see the scale of the FTX capitulation, one of the lowest readings that we've ever had. By the way, I have this on a 14-day moving average just to smooth things out, get rid of that daily noise. And we're really looking at the structural trends here. We're looking at the bigger picture. Now you can see that we did break up above one for the first time in many, many months. Let's actually zoom in to a 2-year basis here. So we have managed to get some upside momentum. Profits were taken. You can see that as the profits start getting taken, the uptrend starts to cool off just a little bit. Now, the other thing to note is that as we've pulled back in this week, we've seen aSOPR fall down below a value of one. That means that on average, if you look at the coins that are transacting right now, on average, they are locking in a loss. And that's really what we mentioned before. There's a lot of people trapped up here with coins bought much, much higher. And that's why that old supply realized price is so important, because it's telling us that we're at the average acquisition price for a bunch of people who've seen red for a long time and they just might be uncertain about what comes next. And thus they start to take profits and they also take losses. They're willing to take that exit liquidity just, well, price is up, I'm just going to take it before it goes lower. There's a psychological element that comes into all of this. So really the question is, does this thing actually reverse and get back above one, showing that that profit returns? And if that profit returns, it means that there's demand coming in to absorb those profits. And ideally, you would also see momentum tick up. So you can start to see that you want all of these things to start reversing at the same time. Otherwise, you tend to sit there and go, maybe we keep our bear market glasses on just for now until we see these things really start to reverse in earnest. Now, the last metric I'm going to touch on is very similar to aSOPR in the way that you consider it. You can see these retests of the underside during bears. You can also see retests of the of a value of one during more bullish markets. This one here is literally taking a ratio between the realized profit and the realized loss. So where SOPR is going to account just for the average coin, This here is going to look at the average USD value in total. So it's going to account for whales, it's going to account for shrimp to a smaller extent, it's going to account for shrimp in much larger size. It's going to account for how much value is actually flowing through the network. Now, what you can see, similar to 2019, 2019 was much larger, but we had a significant break above, and then we came back down and retested. But note that we actually started to return into green territory. We got these positive retests. This is over several weeks and months, mind you. This is on a big picture scale. But overall, 2019 was showing that there was a net uptrend in overall profit being taken, and thus demand flowing in to absorb those profits. Here we are in 2015, a similar story. We start to trend higher as profits move back into the system, and we're seeing more and more investors coming in to soak up those profits. So in our current market structure, let's go on a 5-year basis for this one. We have had the initial wave of capital. There has been profits being taken, and that is general. I mean, it's a prerequisite really for a more positive market. But as you can see, we have come back down and there were more losses than profits being realized over the last week. So we are in this retest phase. We're kind of at a bit of a decision point. We've seen the market reject from some of those key levels. And the question is, does that bear market kind of hangover come back in and spook people again? Do we actually see that transition? We're still in that long grinding process of working out, are we transitioning out of a bear? Or is this in fact just another phase of the bear? So really what we do want to see is this thing start to bounce higher, showing those profits returning to the system. If on the other hand, we start to see these things accelerate to the downside, you start seeing that generally speaking, people who are in loss are panicking and they're saying, actually, you know what, this thing could be going lower, and start actually bailing out. So it's really about understanding the sentiment. You're looking for the momentum of these things. You're looking for reversals on macro and micro timescales. So just like price, these things will reverse on the smallest time frame and propagate to larger time frames. The larger time frames give you much, much more signal, but they're much, much slower. The smaller time frames are much, much noisier. And when I talk about time frames, you can also consider this in terms of moving averages. So on a 14-day, that's going to be a much, much slower but higher conviction. When it's green, it typically stays green. When it's red, it typically stays red. If you bring this down to a 7-day, you're going to get lots more noise, lots more false breaks, but it will be much more responsive. So it's a bit of a trade-off, the same way that reading price action is. So thanks everyone for tuning in for that session. Hopefully you enjoyed it and learned something new, particularly about understanding the adjustment for NUPL and for MVRV. Now, if you did miss it, we recently released a Mastering MVRV dashboard for both Bitcoin and Ethereum. You'll find them in dashboards underneath the profit and loss section, also in the description below. Strongly recommend checking those out alongside the report that goes with it. And also be sure to check out our new Onchain signal, which again, you'll also find in the description below, which is helping us pick those tops and bottoms and builds off the concept that we do here in the Mastering MVRV dashboard. So until next week, I'll see you then. Cheers.